I can tell you honestly, the one thing that keeps me up at night is that as the market goes down and our strategy is punished disproportionately, what keeps me up at night is knowing that some people are going to panic.
Welcome back to Library of Wealth. Today we have ARK Invest Cathie Wood, discussing her outlook for the market conditions we're seeing, as well as the influence that the stock and crypto markets are having on Bitcoin. Cathie will also discuss her financial prospects for the next few months, as well as whether or not there is an end in sight. Although Bitcoin is currently feeling the consequences of the current economic downturn, Cathie discusses other countries that are experiencing a currency crisis as well, and they haven't seen the worst of it. She believes that the current trajectory is merely a foreshadowing of what is to come. We'll take a look at her Bitcoin prediction, as well as her investment thesis for the stock, crypto, and capital markets. Stay tuned to the end of the video to hear Cathie's predictions regarding the current market meltdown, recession, inflation, and the impact of interest rate hikes on financial markets. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
If they're looking at their accounts on a day-to-day basis. We keep saying, almost every time I talk, I say we have a 5-year investment time horizon. Cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. Let me talk a little bit about FUD, fear, uncertainty, and doubt. In a market when Chairman Powell, Federal Reserve Chairman Powell, sort of changed his mind from inflation is transitory to perhaps it's not transitory. I think that has unnerved the markets, and we've got investors and analysts fleeing back to their benchmarks. Our strategies typically include stocks that are not in the broad-based benchmarks. And so our stocks are the ones they sell in order to move back into the benchmarks. I've been through this time and time and time again. This is no different. And so we usually do the opposite. We know they're throwing our stocks out, and therefore, instead of trying to get close to any benchmark, and as you know, we don't have a benchmark. We're looking to the future, not the past. We concentrate our portfolios towards our highest conviction names and toward those stocks that have been punished disproportionately and we believe unfairly in the marketplace. And just to give you a glimpse of what I mean, our portfolios, our strategies have been associated with stay-at-home stocks because they treated us so well during the coronavirus crisis. But the point we've been trying to make is that the world has changed permanently because of the move towards increased digitalization. We're not going back. What's causing indigestion in the markets? It could be tax loss selling. That should be winding up pretty soon. It could be leverage in the marketplace. We know that a lot of maybe especially younger people have taken on leverage, but I think the leverage in the ecosystem was high enough to suggest that many others were on margin as well.
Cathie goes on to say that in certain countries, they don't want to have to depend on politicians to decide on monetary policy. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. Today, they'll be able to offer lower rates to savers and higher rates to borrowers.
So we're certainly seeing that cleaned out and resetting. Another thing that came out when we were talking about why would they be punishing our stocks when all of these signs of deflation and slowdown are starting to crop up. And I think many people who attend our brainstorms regularly concluded that, most people have never seen exponential growth. And they certainly haven't seen convergence of exponential growth trajectories that we see, for example, in autonomous taxi networks, the convergence of robotics energy storage, and artificial intelligence. So one S-curve feeding another S-curve. We think that delivers $10 trillion in revenues in year 10 in 2030. Now, if that's right, that's from zero. The returns are going to be phenomenal for any company involved in that particular space. And we also have a lot of behavior, especially during risk-off periods, that is informed by the past. Algorithms just use past in order to determine what to sell and what to buy, and that certainly is true this time. Algorithms are pretty mindless when it comes to the future. In fact, they don't incorporate anything about the future, and more than half of the trading volume we believe today is algorithm driven in some way, shape, or form. And then the last thing I'll say is a lot of people, at least on the brainstorm, are a little unnerved by what's going on in the labor markets. It's just confusing. And these are very experienced professionals. They've run companies, and this just doesn't make sense to them. And so when we happened upon the, hey, you know, the transformation of the world thanks to DeFi and DAOs and NFTs is probably going to be a lot bigger or more profound than anyone can now anticipate, and will impact the labor markets importantly. And so we're going to be doing a lot more research on that. And so on this Friday in the winter, or soon to be fully winter, instead of staying at home, you know, you should stay connected and stay competitive and stay globally competitive. And for any corporations who are listening to that, or other businesses, you need to embrace these new technologies because they're going to be transformational. And if you don't embrace them, you're not going to win. In fact, you may not be around. I think that the innovation stocks that have been pummeled in here, many of them are a quarter to a third of where they were earlier this year. I believe they are going to be the big winners once we confirm that the inflation is transitory, that there's a recession risk out there. And when there's a fear of a recession, value stocks get hit hard. And I do believe there is something to this. And when inflation gets hit, value stocks get hit hard. So stay tuned for that. The other thing that I'd like to tell you, now these are just our strategies, but my guess is other innovation-oriented portfolios would have these sorts of opportunities. At the peak in February, our strategies, according to our estimates, which, as you know, Wright's Law plays a central casting role, our strategies, we believed, were going to deliver a 15% compound annual rate of return over the next 5 years. So that's a doubling over 5 years. Not bad, nearly twice as much as what equity markets typically deliver over time. Today, assuming that our valuations are crushed down to FANG-like multiples in 5 years, we believe that our strategies, certainly the flagship, all of the innovation platforms together, are going to deliver close to a 40% compound annual rate of return. That's a quintupling over 5 years. So we actually are much more comfortable today than we were in February in terms of the outlook for our strategies.
Cathie Wood says that ARK makes all of its research readily accessible to the public, providing her customers with clarity they can't get elsewhere in the market. She also stated that the investment group will continue to release its financial framework because the traditional banking industry doesn't deserve shareholders of innovation. Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. What do you think of Cathie Wood's interview on the current financial market, her outlook for Bitcoin and what's to come for this year? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.